this market, what to do when you're in correction territory. Well, I will say this: buy when everybody else is selling. That's what you need to do. You need to do that because you cannot predict the market. And do not try to predict the market. At the end of the last year, we had put on a couple of interesting trade. And by the way, don't forget to join my Patreon channel to see what I'm talking about. But we had put some interesting trades at the end of the year, and we thought, hey, this is great. We're going to keep on going like this because the Fed is going to lower rates. And then guess what happened? At the end of the year of 2024, the Fed says, I'm not going to do 4 cuts. I'm going to do 2 cuts. All bets were off. Panic. What do you mean you're not going to cut anymore? What's going on? What's happening? Surprise, surprise, surprise. And it's been surprise, surprise, surprise since that time. I mean, everything was supposed to be great with Trump, but unfortunately, that the U.S. administration has now created something that is called uncertainty. And how do you measure uncertainty? By the level of risk. And the higher uncertainty, the higher risk, the higher the discount rate, and the more you discount any asset or any future cash flow, the lower the present value. So what do you do in those circumstances? You buy when everybody else is selling, and they're going to keep on selling for a while. So be careful. Don't buy everything now. It's time to go shopping, but take your time in shopping. Look carefully what you're getting. Take your time. 2 reasons why you need to do that. 1, no one is able to predict what the market is going to do. 2, there's a huge amount of uncertainty in this market right now. So what do you do? But 3, you need to realize that you need to do something. You can't just do nothing because then you lose an opportunity. You can make money in a down market. It is possible. Some have done it, but you have to be careful. You have to understand that valuation is based on the amount of cash flows, but it's also based on the discount rate. It's based on the risk. How is that discount rate measured? Well, that's a big mystery because, quite frankly, it is difficult. It's easier to predict a cash flow. I mean, how much is Walmart going to make next year? Well, I have an idea, but what's the discount rate with cash flow? They don't tell you. They don't tell you what the risk is. I mean, if you look at you've got all the channels, go on social media. They tell you how much money you're going to make. The market is down. The market is up. But they don't tell you how much risk in the market. They say there's risk. There's risk for you crossing the street, but you still cross the street, right? But you never know how much risk there is. There's risk in wearing clothing. There's risk in having a cell phone. Do you know how much risk is involved? You never know. It's even worse with the stock market. And they will not tell you. The same way the cell phone makers are not going to tell you how much risk you are to carrying around your cell phone. The stock market is not going to tell you how much risk, because if they told you how much risk there was, you'll be scared. And more importantly, you wouldn't understand it and you wouldn't go on it and you wouldn't follow it and you wouldn't do it. So they don't want that. So best lessons to do: buy low, sell high. Yeah, no. Buy when everybody else is selling and sell when everybody else is buying. Don't forget.